Hi, I'm Tom Lydon, editor of ETF Trends, here in Chicago at the Morningstar ETF Conference. Here with Simeon Hyman, who's head of investment strategy at ProShares. Simeon, great seeing you.
Thanks for having me, Tom.
So you folks are right in the key spot in the ETF space, dividend growth. You've got large cap domestic, you've got mid cap domestic, you've got small cap domestic, you've got some global areas as well. But emerging markets, you can really apply the same strategy, correct?
No, that's absolutely right. Dividend growth is a very popular space this year. We, of course, think it's a powerful evergreen strategy, but we'll take the momentum. But indeed, it applies very well even in emerging markets. If you look at just the last 20 years or so, and you look at companies that have grown their dividends, they have substantially outperformed companies that even have just paid dividends. And that works in emerging markets as well as it has in domestically and other developed markets.
Yeah. Most people don't realize that there are a lot of emerging market companies that are really consistently paying dividends off. It's not as though they're just a handful, correct?
There are. We apply the same strategy in our EMDV, ticker EMDV, which is our emerging market dividend grower, that we do in our domestic funds. We look for the longest track record of dividend growth. In emerging markets, that's 7 years, and that gets you 57 stocks out of over 800 in the index. So it's quite selected. It's a real stock picking strategy, but there are enough to get a nice, well-diversified portfolio.
But 57 emerging market stocks that consistently grow their dividend, that's a good chunk.
It is, and we equally weight them, and it's very well diversified across sectors and countries. And one of the things that we've found, as we've studied the performance of the domestic ones, is that the power of dividend growth really comes from stock selection, not from a factor or a sector tilt. And in fact, that's been playing out very well. This has been a raging bull market for emerging market equities. Since we launched this ETF, you have emerging market equities up over 30%, and EMDV is capturing 90% of that crazy bull market. Very consistent with what we've seen domestically, where a ticker NOBL, our flagship large cap, over the years has run about 70% down capture, 90% up. So we really are very confident that we're going to get the same kind of performance from emerging markets.
So nice value in emerging markets, especially since it's been unloved for a few years. And we have a lot of advisors who are thinking about, geez, I'm about ready to up my allocation. Think about your strategy there. There's some historical MSCI emerging market indexes, but you're not getting that selection, that dividend growth selection.
Yeah, and just to put one more sort of cherry on top of that, generally dividend growth stocks trade at a modest premium to the broad equity indices because they're higher quality, higher returns on capital, all for good reasons.
Yes.
Right now, EMDV is trading at a little bit of a discount, about a 15% PE discount to the MSCI Emerging Market Broad Index. So that's a little bit of an anomaly in the dividend growth space.
Sure, and that PE compared to the S&P is even that much more discounted,
Indeed.
Correct?
Indeed.
Simeon, as always, great seeing you. Thank you.
Thanks for your time.